Hello and welcome to today's Your Daily Five. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'm excited to join you on this Friday, September 24th. Before we get going, I want to invite all of you to come over to earningsbeats.com. If you scroll down on our homepage, you'll see an opportunity to sign up for our free Earnings Beats Digest newsletter. This is a newsletter that I publish 3 times a week, Mondays, Wednesdays, and Fridays. All it takes, your name, email address, hit that subscribe button. I'll make sure you get set up. There's no credit card required. You may unsubscribe at any time. It's really an educational newsletter where we try to give you some insights as to how we look at the market. There's going to be articles on relative strength, earnings, candlesticks, any of the things that we use in our approach, we tend to write about in the newsletter. So again, just type in your name, email address, hit that subscribe button, and we'll make sure we get you set up. All right, before I get into my 5 charts today, I just wanted to point out something that you may not have recognized, but if you look back over the last month in the market, and this is as of Thursday's close, there are only 3 sectors that have actually performed in positive territory over the last month. One of those, consumer discretionary, is kind of surprising because consumer discretionary, if you've been watching relative strength, this is a group that's really been struggling for several months, but it's beginning to turn the corner. And that's really where I want to focus in this Your Daily 5. I want to take a look at the consumer discretionary sector and give you 5 charts there. So first, let's just start off with the consumer discretionary chart, the XLY. If you look at it, I mean, overall, I think the XLY has been doing fantastic for many, many years. This is a weekly chart. You can see this was the Q4 2018 trade war with China. Then, of course, we had the pandemic. But we've ridden through all of that, and we have been moving up, and we've been trying to break out past 185 here over the past, I don't know, maybe the last couple of months. Been trying to get through 185 for the first time in history, close above 185, and haven't been able to do it just yet. But if you go down here to the bottom, you're going to see the relative strength. And throughout this bull market, the XLY has been an outperformer versus the S&P 500. This is why it interests me so much. We want to look at areas where we see outperformance more often than not. And so, you know, just recently here over the last few weeks, I think we're seeing a breakout of a bullish relative wedge. And we saw a huge run up from the pandemic low throughout 2020 and into early 2021. And then we consolidated all the way back basically to where we broke out from on a relative basis. And now we're starting to turn back up again. And I think it's just starting. So with that in mind, I'm going to give you 4 industry groups with a stock where I think you might be interested in taking a look at. So let's go ahead and pull this up first. We'll go into the hotels area. So hotels, when you look back over the last 6-7 months, you can see we've really struggled to get through 2,600. Haven't been able to close above it, but we've really been strengthening here over the last couple of weeks. And we're right back up here challenging again. The daily PPO has worked its way into positive territory. You come down here and you can see from about the early part of September, the relative strength of hotels versus the S&P 500 has been incredibly strong. It's now taken us to about a 3-month relative high. And so I'm actually looking at CPLG as a possible trade. So I'm going to just give you a couple of things about this chart that I think look kind of interesting. Now, this is just a candlestick chart. Here you can see the big move up. This was earnings related. This is CorePoint lodging. CPLG broke out and has just consistently been moving sideways, then breaking out, moving sideways, breaking out. And if you look down at the very bottom, the last panel, you'll see that CorePoint lodging relative to the hotels has been trending higher for many, many, many months. So this is one of the leaders in a group that's just starting to turn higher. So I think CorePoint is one certainly to keep an eye on. Next up, let's take a look at the travel and tourism group. Now, look at the last 3 days. I wrote about this to members 2 days ago. when we saw this first breakout above, broke out of this downtrend. But we are now starting to trend above the 20, which is above the 50. The PPO's gone positive. Look at the volume coming in, and then look at the relative strength, travel and tourism versus the S&P 500. Looks to me like we're just getting started. Now, one of the stocks within the group, Avis, this has been a tremendous performer. The last 2 days, very strong, moving up from about 93 or 94 up to the 108 level. When you look at the relative strength versus its travel and tourism peers for the last 6-7 months, very, very strong, just breaking out again. Next up, let's move on to specialty retailers. So with the specialty retail group, there's a couple things really to focus on. First, specialty retailers they have support just above the 2,800 level. We were down there at the end of August, went back down twice here in September, and we've been holding that level. Now, there was also a double top. I didn't draw a line, but there was also a double top in here at about 2,750. So maybe we give it down to 2,750. That would bring the 50-day into play, which currently is at 2,783. I'm going to say 2,750 to 2,800 is a key support area here. But I love the volume that's been coming in to this group. And again, we go down here, we look at relative strength. Specialty retailers had been downtrending for quite a while. They actually bottomed back in June, but in particular, middle of August is when this group on a relative basis really started to move. And when it started to move, I want you to look at the volume that picked up at the same time. So we're getting a lot of really positive action here in specialty retail, and it's coming with a lot of volume attached to it, which I think is very bullish. Now, within the space, the stock that I like is Ulta. Ulta came out with its earnings and gapped up here to 410 after a huge move up. So we had already gone up 5 days in a row. Then we gapped up and we put in that filled candle off of an uptrend on very heavy volume. And so that kind of marked a short-term top. We've worked our way all the way back down to this breakout level right near this 370 area. Also, there's this gap support came in probably at about 367, 368. We essentially went back down and tested all of that and have just now started to turn back to the upside. So I think the current price down to this 368, 370 area is a good area to accumulate Ulta. I think eventually we're going to make a move back up to this 410 level and then through it. But just looking at the relative strength, you can see that it's been moving higher relative to its specialty retail peers. Over the course of the last 2 or 3 weeks, you can see that the relative strength has pulled back, but that's after earnings came out and we went through this consolidation period. This is very normal to have this kind of a pullback in relative strength when you're consolidating, because the group overall has been moving higher. So here you can see the group moving up, but Ulta's been consolidating, and as a result, we've seen that relative strength pull back. But I think this is an opportunity for Ulta. The final group and chart that I wanted to show you, this is a group that's not just starting to turn for the consumer discretionary area. This is a group that's been pretty strong for a while. I would watch 205 to 210 to the downside. I think that's your key support area on Business Training and Employment Agencies Index. Again, you can see that volume that's been pouring in here over the past few days back to the upside, which I like. On a relative basis, it's been going sideways here for the last month, but that's not bad because consumer discretionary has been outperforming every other group except for energy over this last month, as I showed at the beginning. So the fact that the group is just going along with the XLY right now, that's not a bad thing, or along with the S&P 500. I think that's actually a pretty good thing. Now, within the group, I like AMN, and AMN is AMN Healthcare Services. This is a stock that has been steadily moving higher now for quite some time. Look at the relative strength versus AMN on AMN versus its peers. It's been going up since the end of April, continues to push higher. So AMN, I think, is a really good stock in a group that has been very strong. You can see that this group relative to the S&P has really been going up most of the last year, with the May to July period maybe an exception. But for the most part, we've been going higher, and AMN's been a really big winner. All right, that is it for me today. It was a pleasure joining you on your Daily Five. Please remember to go to earningsbeats.com and sign up for our free EB Digest newsletter. Again, just go into earningsbeats.com, scroll down. You'll see it here. We do a lot of free events. So if you're part of the community, you'll get invites and links to come into the room and join us. We'd love to have you. Everybody have a great day and happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.